have generally never analyzed stock as fast as I am right now because of Claude skill. So this image really sums everything up right. So I feel like I'm running 3 analyses, a research deck, and a portfolio manager at the same time without sacrificing the quality. So it just comes down to one simple word: leverage. With Claude or any AI agents for that matter, you have way more leverage as a retail investor that you would have had your entire life by doing this on your own. So in this video, I'm going to break down 9 skills, how they work, and how you can build really good one for your own investing. And if you have never used AI for stock before, even if you are never written a prompt in your life. So let's hop into a live demo and get going. Make sure you have subscribed to my community where I share every single AI that helped me to invest smarter. Let's start with the most basic one first. The first one, the summary level. Annual reports are designed to bore you. 200 pages, dense legal language, footnotes that contradict the headline numbers. Most retail investors give up by page, maybe the third page, and buy the stocks anyway. So this level fixed that. Not by skipping the work, but by getting Claude to do the reading for you. So what to do? Drop the PDF into a new Claude chat. They ask 3 specific questions in a single prompt. Read this annual report and answer 3 things. Right. First, what are the 3 biggest sources of revenue and how did each one perform versus last year? Second, what happens to gross margin and what reason does management give for any change? Third, what are the top 3 risk management is generally worried about? Not the boilerplate ones, the ones that keep coming back to in their own discussions. And the third one is a trick, right? Every annual report has a risk section full of legal boilerplate. The risk that matter are the ones management keeps mentioning outside that session, so in their own commentary. Then follow up, this is super important, quote the exact line where those risks are discussed in the MD&A sessions and save the output. Alright, stack it with the company and the year. When earnings come around in 3 months, you will have a baseline to compare against. So that's the whole level of using Claude to analyze your reports, right? 15 minutes per company instead of 3 hours. Level 2, the spillover level. Whenever a trend goes mainstream, AI, EV, whatsoever, data centers, right? The headline winner has already moved 300% and you missed it. But the trend has not finished yet. The second wave names, the suppliers, the partners, the adjacent businesses are still cheap. The problem is finding them takes an analyst team 3 months, 6 months of supply chain mapping, or it used to, right? So what to do? Pick the obvious winner. You do not need to be clever over here. NVIDIA for AI, okay? Constellations Energy for nuclear. Eli Lilly for weight loss, right? Then run 2 prompts. First, the supply chain. Map the full supply chains around the winner, example NVIDIA. List every category of supplier, raw materials, components, software, services, logistics, energy. For each category, give me 3 to 5 publicly listed company with tickers and explain in one line what they sell to NVIDIA. Alright. Second, beyond direct suppliers, name 10 publicly listed companies that benefited indirectly from NVIDIA growth. Adjacent winners only, companies that build on their platform. So just put everything here and pick the 4 most interesting and validate for company ABCD and what percentage of revenue. So the name that pass go on to a watch list. Rerun the loop every quarter for your top 3 trends compounded over a year, and this is how retail investor stop being late. And I also build a interactive market spillover where you can just simply click. Example, this one is based on AI. So there are a lot of industry that spill over because of AI. And all you have to do is just click on it and then it will show you the price and then the top 10 companies that are spill over because of AI and what are some of the upsides based on analysis. Right? You can get it in my website. Level 3, the stress test level. Here's the uncomfortable truth about investing. The mistake that costs you the most is not the stock that you bought. It is the stock you refuse to sell. You hold it because you love the story. You ignore the warning sign because they did not fit your narrative. So we have go through all of that, and the fix is to outsource the bear case to something that does not have your ego, don't have emotions. So what to do? Write a thesis on a stock in 3 sentences, not the target price, the why. Something like I own NVIDIA, because the company has a structural cost advantage. Management has a strong record of capital allocations and expansion into maybe a new markets. What sort of markets they are expanding? All right, just copy and paste this prompt. All right, so this is the real output. You are not just getting a bear case, you are getting an early warning system for your own thesis. Make the call. If the bear case reveal risk you genuinely have not considered, then you might want to consider your next action. So run this every quarter on every positions over 5% of your portfolio. Level 4, the earnings level. So when you listen to an earnings call live, right, you are missing more than you realize. You are taking notes, you are getting tired, you are absorbing maybe 60% of what is said, and you are absorbing almost none of what is avoided, right? The dodge questions, the tone shift, the language that quietly get more careful than last quarter. That's exactly where the signal live, right? And it is where Claude is at its best. What to do? After the call, grab the full transcript, seeking alpha, motley fool, or the company's IR page, get prepared remarks and also Q&A, then this prompt. Right, just copy this prompt. Here is the full earnings transcript for whatever companies, X year and whatnot. Track this for every company you own. Then write one paragraph for your file, what they say, what they avoided, and what to watch for next quarter. 3 quarters from now, and you will see exactly when the story turns. Now, level 5, the portfolio level. So if I ask you to describe your portfolio exposures right now, not the tickers, right? The exposure, could you actually do it? Could you tell me how much of your money is really betting on lower interest rate, on a stronger dollars, on AI capex, on Chinese consumer recovery? Most retail investors, they just can't. They bought each stock on a different day for a different reason and never stitch the pictures together, right? So this is how a diversified 20 stock portfolio turns out to be 3 bets repeated. So what to do? List every holding in this format. Ticker, percent of portfolio, 1 sentence thesis. Include cash and bonds, don't round it. So, and then you copy and run this prompt. So most people will make a decisions right after running this prompt. It exposes what was hiding. Next, the stress test, right? So this is a very important prompt as well that you want to stress test. Example, like if this scenario happened, maybe like Fed cuts rates aggressively, oil crashes to $40, China clamps down on tech and whatnot, which positions get hurt most, which benefits, and what's the net impact on the portfolio? Pick the 3 scenario you genuinely think are possible to happen. Don't pick disaster scenario that would not happen, right? So pick the one that might. Now you finally know what you own. Level 6, the macro level. Macro is the noise that destroys retail returns. Fed mates and Powell says some things, Elon Musk says some things, the news anchor explain what it means for the markets, and you panic trade based on the headline that has nothing to do with the actual stocks you own. All right, so the fix is not to ignore macro, the fix is to translate it from market level noise into stock level informations. What to do when a real macro event lands, example like Fed statements or OPEC announcements, Bank Negara decisions, tariff news, pull the actual press release, not the commentary, but the real source, right? And drop it with your portfolio with this prompt. So the first price impact gets within like maybe like 5 minutes or an hour, and then the second price takes maybe weeks. So that's where the each leaf, right, act only on medium or large impact. Ignore those small ones. That's just noise dressed up with signals. People just going to fry things out, right? So save the analysis with the date and revisit 2 weeks later. Over time, you will calibrate which macro events actually move your portfolio and which one are just plain noise. Okay. Level 7, the screener level. The most expensive habit in retail investing is buying stock because somebody else said so. Oh man, right? A friend's tips and influencers pick, a YouTuber's thesis. You buy because you trust the source, not because you did the work. Right? And when it goes wrong, you can't even diagnose. Why? Because the original reason was not yours. The cure is simple, is to have your own pipeline. What to do? Define the business you want to own in plain English, including the qualitative stuff, and use exactly this prompt. Okay, so once you have copy and paste this prompt, then ask Claude to turn it into a checklist, and you save the scoreboard, and that's now your filter, right? Pick a universe, Bursa main board, S&P 500 mid caps, whatever fits your account, and run the scoreboard as using this prompt over here. After 6 months of doing this, right, you stop following tips. You are sourcing your own idea. Level 8, the journal level. So every investor I have talked to thinks they have an itch. Almost none of them can describe it accurately, right? So the reason is simple. Humans cannot audit themselves. Memory cherry picks, hit sites rewrite history, and the losses get explained away, right? The wins get exaggerated, and the truth never surfaces until you put it on a paper and hand it to some things that does not care about your feelings. And what you do, just exactly copy this, right? So be a trade log, columns, you put your dates in, dates out, ticker, position size, entry reasons, exit reasons, P&L percent, emotional state at entry 1 to 5, emotional state at exits 1 to 5 as well, macro context in one line, and what you would do differently. So if you don't have one back file the last 6 months from your broker statements before you keep watching this video, then run this prompt. Okay, just copy and paste this prompt. Okay, then pin down the edge, describe the exact profile of my single more profitable type of trade, sector, setup, holdings, periods, right? The answer is usually surprising. Often you will find your edge is in a place you did not expect, and the trades you thought you were good at are actually break even or worse. All right, then pin down the weakness. Same exercise, but for my worst trade. What's the exact patterns of how I lose money? When am I most vulnerable to it? Print that paragraph, stick it where your trades. Rerun the whole journal level every quarter, so your edge will compound and your blind spot will shrink. Level 9 and the last level will be the better questions level. So here's a gap between average investor and a great one in one sentence. Average investor asks, is this a buy? And great investor asks, what would have to be true for this to fail, right? The first questions get you the same answer everyone else is getting. The second one generates insight that nobody else has because they did not think to ask. This is a level where Claude stops being a search engine and start being a thinking partner. So what to do? Step 1 is to reframe every questions you ask. Stop asking yes or no questions. Start asking questions that force a chain of reasoning. So instead of, is Tesla overvalued? Use this. What will have to be true for Tesla to be undervalued at this price? Instead of will Nvidia keep growing, change to this. What's the most likely reasons Nvidia grows slow in the next 3 years? And what's the leading indicator I will see first? So, all right. So instead of is this a buy, change to this. What is the strongest argument someone smarter than me will make against buying this? Then run the 7 master questions on every stock you are seriously considering, right? Paste them into a Claude once at a time. What does management understand about this business that the market does not? And copy and paste all of this, and I will put all of this prompt into my website for free for you to copy and paste. All right. So ask it every time is how you find the question you did not know you needed. Then push back on every question. I disagree with that because put in a reason, argue against my disagreement, and try to change my mind, right? So real convictions survive the back and forth, and fake convictions collapse the first time you try to defend it. So build these habits, or every Sunday, every Saturday, because the market is closed, pick one stock from your watch list and run all 7 questions. One stock may be like just half an hour or 15 minutes. It compounded over a year, and there is 52 deep dive analysis, right? So every one of this is a process you can run tonight with your Claude, with the exact prompt I just give you. Nothing here requires expensive data, a Bloomberg terminal that costs you 10,000 or a finance degree. Just the discipline to actually run them. And as a bonus for you that watched to the end, I have turned the 9 level into a skill where you can just download for free from my website, which I put the link over here. So what it does is pretty amazing. All you need to do is just use 9 stock level of the skill and then analyze whichever stock that you want to use this 9 level to analyze your stocks. And again, thank you so much for watching to the end, and make sure that you share or subscribe to my channel. Bye bye.